On June 14, Nigeria officially floated its Naira currency. This means market forces will determine the exchange rate of her currency as against previous practice where rates were dictated by the central bank.
Naira is now released, is no longer pegged by the federal government, is now released to let it trade based on the forces of the market, which is the demand and supply. So that if the demand for dollars is high, the exchange rate is going to be high. And if the demand for the dollar is low, the exchange rate will now drop a little. So it depends on the demand and the supply of the currency.
According to data on the Apex Bank's website, the Naira stood at 752 to the dollar as at June 26. That implies a 21% decline in the value of the Naira compared to the previous fixed rate of 463.
The implication of diminution in value, and when I say diminution, significant diminution in value of the Naira relative to the dollar and other hard currencies, obviously, is that the capitalization of our banks from the international perspective, from the perspective of the international banks that are dealing with them and lenders and investors, is that the value of our banks have shrunk significantly. So it is not, it's not unthinkable that there may be an expectation that there might be a recapitalization requirement imposed on our banks by the Central Bank of Nigeria.
For the ordinary Nigerian, a devaluation means more inflation and a further erosion of purchasing power. But what about the impact on the banking system? Let's take you back to the 2004 banking industry recapitalization. Banks' capital base were increased from 2 to the current 25 billion naira. That 25 billion in 2004 exchange rate saw the bank's capital base in dollar terms average $250 million. Fast forward to 2023, 25 billion naira at 750 is just $33.3 million. Experts say recapitalization of deposit money banks may be necessary.
First of all, is that we are speculating here.
Yes.
The central bank, the new leadership of the central bank is yet to be announced, but we expect that announcement will take place maybe sometime around August. With that announcement, we will have clearer policy direction for the central bank. And yes, there is the possibility of a recapitalization direction now, or directive. Now, if that were to come into play, it will now be a question of ability and a question of choice for the existing banks. So the capital requirements will be set. Now, depending on what the new capital requirement to be set is, we will then know who will qualify already.
It's not all gloom for the banking industry if the Apex Bank decides that recapitalization takes place.
What are the specific gains from recapitalization for the banks? Obviously, access to more capital. These banks will be perceived as stronger entities in dollar terms, and these banks hopefully also will, gain higher rankings and ratings, both locally and internationally. So potentially, every time a financial institution is given an opportunity to increase its capital, it's obviously an opportunity to strengthen its standing.
While there's uncertainty surrounding the direction of the central bank, international investors and Nigerians keenly wait for new policy directions and how they will impact the economy.
I will expect a very inclusive approach by the central bank. The other thing I will say is that in setting these capital requirements, you actually have to look at the fact that relative to other markets across Africa, right now, the capital requirements for our banks is still, higher than most other major markets except Ghana. So it will be nice to ensure that the central bank is factoring in, the comparative capital requirements across Africa so that our market remains competitive. I'm sure you've seen that a lot of Nigerian banks have gone to other parts of Africa to set up banks. And you will find out that some of those markets are more attractive because of factors like that. Now, in terms of what will impact the man on the street, I would say that I look forward to a central bank that continues to deepen financial inclusion, that continues to recognize that the banking inclusion, the financial inclusion needs of Nigeria cannot be met only by the commercial banks, cannot be met only by the commercial banks, the merchant banks. There is a lot of room for the fintechs to operate, and hopefully I would look forward to a Nigeria in which mobile money can be as widespread and as well, adopted as, for example, what we have in East Africa.
As the new government sets the stage for audacious reforms across multiple sectors, the banking industry awaits guidance from the CBN for the anticipated minimum capital requirements for banks. But what's essential for the banks is to have strong capital ratios that can support credit expansion in the economy. Nkechi Nana, Arise News, Abuja.